Good morning, everybody. My name's Phil Hartley. I hope we're all keeping well and safe. And today we're going to do a presentation on R&D tax relief during COVID-19. Just some housekeeping if we can. If you are unable to hear me via your computer audio, please log in via the telephone. Details are on screen. I'll apologise in advance if we have any technology issues today. Hopefully it should all go smoothly, but if we do, I apologise. A little bit about myself. I've worked now for Mitchell Charles for 2 years as corporate tax manager, previously with a specialism in R&D tax relief. Been working probably in R&D claims now for the best part of 8 years. Probably reclaimed around the £6 to £7 million mark for companies across the Northwest. And last year, as a firm, we did a brilliant job in reclaiming over £2 million for our clients. So hopefully we can continue to build upon that. Please feel free to ask any questions using the chat function available. I will be answering some of the questions at the end. If I don't get to manage all of them, I will contact you directly after the webinar's ended to answer any of your queries. You can also contact me directly after the webinar. My email address is on screen. It will be on at the end as well. And this session will be recorded and will be circulated along with the slides following the webinar. So don't worry, you won't miss out on anything. It will all be sent to you. Before I just go through the content, I'd like to just run a poll to be able to ask you a question regarding if you believe your company qualifies for R&D before we start the webinar. Just interesting to hear what your thoughts are before we enter into this. So hopefully you will have that ability to do that in one moment. And then I'll run through the contents. Just in terms of contents today, we're going to do what is R&D, what is it about, what can be claimed and what can't be claimed. We're going to talk about who can claim it, who is claiming it, what industries. Talk about the costs that you can be claiming for. Also talk about the interaction with COVID-19. HMRC have been very proactive in this area during this crisis. So I'll just give you a bit of information regarding that. The key question, how can it benefit my cash flow? And I'm going to just run through a generic example on how that can benefit yourselves. And then I've got some case studies at the end, some real life cases that we've worked on over the past year, just to give you a flavour of what can and can't be claimed as R&D. So I'm just going to give you a countdown on the poll now. Give you 5, 4, 3, 2, 1. And the poll will now be closed. We're just going to collate the results now. If you give us one moment. I think with everything with R&D at the minute, it's everything's working really well from HMRC's perspective. There's lots of claims going in, which is great stuff, and hopefully we'll be able to help you identify potential R&D within your businesses and move on from there. So the results that came through, 32% said yes, 9% said no, and 59% said don't know. So hopefully we can get those no's and don't knows towards more of a yes today with the presentation that we've got for you. So what is R&D? From HMRC's perspective, this is in the BIS guidelines, and they class R&D as, for tax purposes, takes place when a project seeks to achieve an advance in science or technology, and the activities which directly contribute to achieving this advance in science or technology with the resolution of scientific or technological uncertainty that is not readily deducible. That is a very complicated definition for R&D and can put off a lot of people straight away. Many people believe it's just your white coat research and your high level technology that will only qualify, and that's quite simply not the case. So what I try to do when I'm speaking to clients or speaking to prospects is to break down that definition a bit more into just a bit of simpler language, both for yourselves to understand and for ourselves to understand as well, to help you identify as many opportunities as possible. So an advance in science and technology, it could be something that you've done that's new to the industry as a whole, or it's already been implemented in the industry, but it wasn't known how that could be achieved. It could be an improvement to existing processes or systems. that have resulted in increased efficiencies. And that's quite a key one, because HMI's, the BIS guidelines that I mentioned before, state that an advance in science or technology can be, for example, the production of a new cleaning product or process that reduces waste. And I think that last bit is quite crucial when considering R&D, because we're all looking at trying to make ourselves more efficient, streamline our processes. And if we're doing that to an extent that an advance in science and technology has been achieved, then you could be looking at an R&D claim for that work undertaken. An uncertainty in science and technology. So was it easy to achieve the advance, or was there significant problems that had to be overcome? And if you did have problems, again, how easily could you overcome those? Were there available sources available? For example, staff knowledge, which I'd class as having a competent professional in the workplace. Could you go on Google or industry literature to find out what you needed to do? So that would say, is it readily deducible? Or was an investment time required on your behalf to overcome those problems? And if there was a time investment required, then you're looking more likely to have an R&D claim. The key element to take away is that although you could have an advance in science and technology, if you don't have the uncertainty in science and technology, you don't have an R&D claim. You have to overcome a problem to be able to achieve the advance to qualify for the relief. Example I like to give now is mobile phone. So I have an Apple iPhone, and iPhone are at the forefront of all technological developments in terms of mobile phones. So if they were in the UK, they would be claiming for R&D for each model and each improvement they make to the iPhone. But you've also got many different mobile phone providers out there. You've got Samsung, Google, Huawei, Microsoft, etc. And they're all creating a very similar mobile phone. They've got very much similar features, but they can't just go and knock on Apple's door and say, excuse me, how do we do this? They have to have their in-house development team do that themselves and come up with a solution. Even though Apple have claimed for the R&D for the original, the iPhone, the Samsung could claim, Google could claim, Huawei could claim, Microsoft could claim, because they're all doing R&D and it was not readily deducible how to achieve the mobile phone and advancement that they have done. So that shows that it's not just something necessarily that is new to the industry. It could already be out there, but if it's not knowing how to do it, you still could potentially have a claim. So who is claiming the R&D relief? So this diagram comes from HMRC directly. Each year they publish R&D statistics to say how much is being claimed, by whom, in what sector, in what part of the country. And this particular slide picture shows the sectors that are claiming it. So as you could probably think, your IT, your information and communication, and your professional, scientific and technical are claiming this a lot, as are manufacturing. But what I find fascinating about this graph in particular is all the different sectors that are claiming it, other than what you class as the norm R&D sectors. So for example, your construction companies, they're making about 1,500 claims and claiming about 70 to 80 million pounds in R&D relief each year. You've got your financial insurance, and insurance in particular is possibly one that I was a bit more surprised of when I did an R&D claim, because we've just done one for an insurance company, and it was all to do with their internal systems and making that more beneficial both for them to extract information and for the end user to use. Banks fall into the financial and insurance one in particular, with the way they're trying to make their automated systems more easy to use for the customer. You've also got admin and support services there, education, health and social work. All these different sectors are claiming R&D, and rightly claiming R&D if they've undertaken an advance in science and technology and overcoming uncertainty. So I think the key takeaway from that slide is, don't think it's a narrow pool for who can and can't claim R&D. It can be in any industry. It really does depend on the activities that have been undertaken. So what costs can qualify for R&D? You've determined you've potentially got an R&D project, but how do we quantify that in terms of R&D qualifying costs? And I've listed 4 key categories there. The main one, and tends to be the main one with the majority of claims that we do, is staff costs. It's the amount of time that your employees or yourselves have spent on R&D whilst working for the business. And in that includes gross salary, employer's national insurance, and employer's pension contributions. HMRC are quite flexible in the first instance with this claim, because they can acknowledge that if you didn't know about the relief, how could you necessarily keep the records to support the R&D claim and the amount of time that has been spent by your staff members? So you can use reasonable estimates. So you could say Mr. Smith spent 10% of his time in R&D in the year, for example. Mr. Jones spent 40%, Mrs. Smith spent 50%, or Mr. Fletcher spent 0%. It can vary on each employee, as long as we can back that up in the narrative that we provide to HMRC to show what R&D activities have been undertaken. Third-party costs. So it may well be that you've sought third-party help to help deliver the project. For example, IT specialists to build that CRM system that you needed, or specialists in the industry to help you with the research you were undertaking. Their costs can qualify, not quite to the same level as staff costs, but they can still be brought in as qualifying R&D costs. Materials, this can be prevalent in manufacturing, for example. If you're having to build a prototype before going to market with the product, and as long as you're not then selling that prototype, that cost would also qualify. And then I've said something called consumables, and that can include quite a few different bits, but as examples there, I put software. You may have had to buy a particular piece of software for the R&D claim, or travel costs. You may have had to travel to various different places for the purposes of R&D. That would all fall into the qualifying costs. So a bit of interaction with COVID-19 and how that is working out. So HMRC are providing agents like ourselves weekly updates via the R&D Consultative Committee, which we are a member of. And they're trying to make sure that everybody's aware that they are still working, they are still trying to process claims as quickly as possible within their resources available. And actually, they've allocated additional resources to the R&D divisions to ensure they can keep to a 28-day turnaround, which is their aim on all claims. So from submission, in theory, HMRC should have had looked at that and let us know via the online account that we hold for agents that the claim has been approved and is being processed for repayment in certain instances. And those repayments are then another 1 or 2 weeks after we're finding at the minute. Again, they are trying to process them as quickly as possible. So in theory, from submission of claim to receipt of refund, if that's applicable, it can be 5 to 6 weeks, which is quite a good turnaround and really helpful during these times of uncertainty that we've got. HMRC are also taking quite a sympathetic view if a claim's been missed because of the deadline's been missed because of COVID. And what I mean there is, from a corporation tax perspective, you've got 1 year to submit your return and 1 year to amend your return. So if we look at a 31st of March 2018 year end, you had till the 31st of March 2019 to submit, until the 31st of March 2020 to amend. But you may have missed that final deadline to amend your return because a key member of staff was off sick with COVID-19, and therefore they were not able to provide the information that you needed for the R&D claim. HMRC will review that position sympathetically in the hope that they can then allow you to make that claim. It's not a slam dunk and a certainty that you'll get it, but it's worth considering if you have missed an early year because a member of staff was off sick with COVID-19, or how that impacted your business. The member of staff could have been furloughed, for example, that you then make a potential claim. Just a bit more on COVID-19. The rule with R&D tax relief is it can be offset against other outstanding tax liabilities. This is definitely the case for something called the RDEC scheme, which I'll go into a bit more detail shortly. But it's at the discretion of HMRC for the SME scheme. And again, I'll define what an SME is for R&D purposes in a short while. So it's just to be aware that if you've not been paying your pay-as-you-earn rate recently, or you deferred your VAT, for example, which was allowed to do by HMRC, in theory, they may say we want to offset that amount against from the R&D claim against those tax liabilities. But the indications we're getting from HMRC is ideally they don't want to do that. They can acknowledge that at the minute people are needing their cash flow for other means and would like to make those repayments where possible. As soon as we have an update, we will be publishing that through our guide that we've been keeping up to date throughout this crisis. Speaking of the guide, recently we published an article about the Future Fund, And this is a government-backed fund to provide funds during this crisis to innovative companies to continue to undertake those activities and grow the economy. So last week, the first £250 million of that was made available and was snapped up within 24 hours by companies. So it's proved to be quite successful, but there's still another £1 billion from that fund to come. So it's just something to be aware of, particularly if you're a startup undertaking quite innovative activities, that fund could be available to you, and it may be worth making a claim for that fund. But the one bit we have to be careful of is something called the state aid implications. And state aid, as you'll see shortly in the presentation, can have a quite significant impact on how much you can claim as an SME under the R&D scheme. The CBILS applications and CBILS scheme is being classed as state aid per HMRC. So we just got to be careful with our CBILS schemes and CBILS applications that they're not being met to carry on the R&D activities, that they're to help the business as a whole. If it's to help the business as a whole, it won't impact our R&D claim in future. But if it's being used to help with the R&D activities, we will restrict ourselves to the RDEC scheme as opposed to the SME scheme. So just something to be aware of if you are making claims under the CBILS scheme. The furloughing scheme is not classed as state aid, so we don't have any implications of state aid on the furlough and job retention scheme. I think in my opinion, with COVID-19, as much as many bad things have happened throughout this crisis, the one thing I'm finding with my clients is it's allowed them to really consider if they've been undertaking R&D activities or not. And we've noticed quite a sharp uptake in claims being made by companies that we've mentioned this to before and spoken to them about, and they've just not felt they've had any R&D activities available because they've not had the time to focus in and really think about this. Now they've thought about it, they've been able to make a submission, and a lot of these companies are receiving cash refunds from HMRC for earlier tax paid or through a surrender of loss, which I'll go on to in a moment. So I think the key takeaway for me from this presentation is have a think about it. We are here to help you as much as we possibly can in making a successful claim. So what is the benefit? What tangible benefit can I get from the R&D tax reliefs, which is the key question throughout this whole webinar. So as I mentioned just a bit earlier, there is two R&D schemes in the UK. We've got the SME scheme and we've got the RDEC scheme. And the RDEC scheme is for large companies or large groups, and that is defined by HMRC as a large group. An SME is a company or / group with less than 500 staff and either turnover of under 100 million euros or balance sheet total under 86 million euros. Those levels are defined by the EU. The EU SME scheme levels doubled in this instance. The EU treat the SME scheme as state aid, and if you have one set of state aid, notifiable state aid, you can't have another notifiable state aid. So if you, for example, have got an Innovate grant to help with your R&D activities, you are restricted to the RDEC scheme, even though you may meet the definition, the thresholds of an SME. So we would help you throughout that process in determining if you are an SME or you are caught under the RDEC, and we'll explain to you in a lot of detail what we need to consider and how that impacts your R&D activities. So I've just got now just a couple of examples, 3 examples, and the first one being a profit-making SME. So, for example, this company that I've got here, we've identified £100,000 of R&D spend, and in theory, they can get an additional tax benefit of 24.7p in the pound spent on their R&D activities. So on that 100,000, the company's already had £19,000 tax relief in determining its profits for the year. For every £1 we spend on R&D, we get an extra £1.30 as a tax deduction. So this doesn't hit the accounts at all. It's purely on the tax computation. So in my example, that 100,000, we're getting an extra £130,000 to reduce our profits. And that additional 130,000 attracts 19% corporation tax relief, and therefore an additional relief of £24,700 is received. And that could be either as a tax reducer or a repayment of tax. So if we're looking at earlier periods where the company's already paid their corporation tax for that year, then HMRC will refund that £24,700 in this scenario. If it's, for example, let's say it was the 31st of December year end 2019, and the tax isn't due on that till the 1st of October 2020, that would then just work as a tax reducer. So it would work as a cash flow benefit further down the line where you're not having to pay as much corporation tax. But in this scenario, we've got total tax relief from our R&D activities of £43,700 on the £100,000 spend. So it can be quite a lucrative tax relief where R&D activities have been undertaken. And if you're a loss-making SME, you're not caught out. So you're not having to think, I can make this claim, but I'm just going to have larger losses sat there to be used in the future. HMRC allow you to surrender the loss you've incurred as a result of R&D activities for a cash credit at 14.5%. And that can work out to be worth as much as 33.35 in the pound for an additional in the benefit to the company. So just using the same numbers that I used before, we exchange the lower of the total R&D spend for tax purposes, which in this instance is the 230,000, being the actual spend of 100,000 plus the additional deduction of 130,000, or the taxable loss. So I'm going to say in this instance that the lower figure is my 230,000, and we're exchanging that £230,000 for 14.5% tax relief. And this will provide the company with a payable cash credit of £33,350. So that is money. In effect, HMRC are buying your losses off you, so you can use the money they're paying to invest into the company and invest in the R&D activities. So on that initial £100,000 spend, this brings the benefit of 33.35p for every £1 identified as R&D spend. So I think the takeaway there is, if you've made the loss, that's not an issue from an R&D perspective. We could get you some money back that may help you with your R&D activities going forward. The RDEC scheme is different, very much different, and provides a much lower rate of relief, which is why it's important for an SME in particular to consider what state aid have we potentially had during the year. Should we take on state aid, or should we be just reliant on the SME scheme? And there's many pros and cons to that we can discuss and help you with if you're having to make that decision. The official rate for the RDEC scheme is 13%, and that's from the 1st of January 2020. Prior to that, it was 12%. But the way the RDEC works is that for the £100,000 we spent on R&D activities, that generates a taxable income to the company of £13,000. So it's subject to tax on the £13,000 credit at 19%. And so at 19% on that £13,000, you end up with a net cash repayment under the RDEC scheme of £10,530, which is significantly less than the for-profit making SME of 24,000 that we talked about before, or for a loss-making SME of £33,000. It's still a great cash flow inflow, and the rate tends to be a bit lower because it is the larger companies and groups that are utilising the relief. So they probably have a lot more spend on the R&D, and therefore they're still getting quite a chunky amount back. But it is definitely something to consider on a state aid side of things, or from an SME who may get caught by this as a part of a larger group. To help bring a bit more realism to what I'm talking about, we've got some case studies here. So these are claims that we have done throughout this last year, helping our clients receive R&D relief on these claims. So the first couple are what I would class as bread and butter R&D. So the first one's IT software. So the claim was made for the development of an online digital football platform. The advance here is that the initial design and construction of the platform had never been done before, and it was therefore first, and the coding was unique to that situation. And then once built, they've continued to improve that platform and make it better and better as it's been going along. Again, the uncertainty is there, no other platform like it, and therefore it wasn't readily known how it could be built. It wasn't really known which coding would be needed and how that coding could be built. So the result there was last year on its own, we received over a six-figure cash credit from HMRC. That was submitted, from memory, it was submitted in back end of December, and the client received the money at the beginning of February. So it was processed extremely quickly, without any sort of comeback from HMRC. Next one is the medical industry. This is a claim made for research into dosages of drugs for optimum weight loss and weight maintenance. So this is born and bred scientific research being undertaken. The advance here, proving that certain drugs can be used for weight maintenance and that lower dosages than recommended can achieve the same weight loss. So this hadn't been done. There was no research out there of its kind, and there it wasn't known if it was feasible and if that advance could be achieved. So clear uncertainties and problems that could be prevalent in this project. Result: 5-figure refund for the client from HMRC for the amount that had been reinvested into the research. And they've gone one step further now and are looking at different drugs to see if that could receive the same sort of treatment. So I think that's quite crucial here, that this company have gone, right, we've got that money back from HMRC, and we can use that to further enhance that and further enhance our business. The next few claims are a bit different, not what I class as bread and butter, and it really is about when we're speaking to, in my case, speaking to our clients and really understanding what their business is about and what they've had to do to get to a certain point and identifying that R&D with them. So not that I need this product, but this is for a backcombing brush. The brush, and I'm talking as if I know quite a lot about it, but I really don't. This was a brand new technology and never been done before. There wasn't a product like that on the market, and therefore they had to research if the market could take the product in the first instance and then develop the product from scratch. And so it wasn't known if it could be feasibly achieved, and it could be cost effectively achieved. The client has received 5-figure refunds from HMRC via cash credits, and that's been reinvested into the development of the product. That product is now worldwide, and they're now looking at developing a version 2 of that product. Again, showing how much the money that comes in can really help with the innovative activities of the company. A recruitment agency for this one, and you'd be thinking, recruitment agencies, where's the R&D in a recruitment agency? And this one was for a CRM system. So they searched the market for a suitable CRM system for their activities, and there was no off-the-shelf product available for them. So they had to develop a system with the use of third-party IT specialists from scratch. And this claim centered around the coding for that system. The third-party specialist did not know how to do if the coding would work for what they required it to do. The uncertainties was technologically feasible to create this system, and there wasn't any readily available information to assist with that coding. So it wasn't anything there that could help them with that. The result here, received a 6-figure refund from HMRC, and that got reinvested into the further development of the system. And now that system's working, it's working great for the company. They've noticed much more benefits from that in terms of efficiencies and the amount of people that are using that system. This is another manufacturing one, and the final case study that we've got today. This is for development of a new machinery and an absorbency pad. So the absorbency pads here are where we've got a tray of mincemeat, for example. It's that film at the bottom that absorbs some of the juices from the meat. The company in particular here wanted to develop a faster, more efficient machine and develop higher absorbency pads. So the amount of juice that the pad could take. Uncertainty. They didn't know if this machine could be developed in the first instance, and if it was to be developed and faster, would the quality and costings remain the same on the production of the pads? And then also, could they develop a pad that could withhold higher absorbency levels? Here again, claim we worked with them and they received 5-figure refunds from HMRC. And they've now gone one step further with their development of absorbency pads and have been able to roll out higher levels of manufacturing facilities. So that concludes the presentation, but what I'd like to do is just do another poll, which asks the same questions we did earlier. And it's just thinking, if having heard the presentation, having gone through it, do you now think you qualify for the relief or not? And we'd be more than happy then to answer any questions that you may have if you've been bringing them through, or if you'd like to use the chat function, please send them over to me. More than happy to answer any questions that you may have. I'm just going to give you a couple of more seconds on the poll. So 5, 4, 3, 2, 1. That's great. And we just got a couple of questions come through. So one question is, would like to enter a claim, not sure we would be successful. What would the process be? So where we come into the mix is to help you with that, and help you with that claim process, and help you understand firstly what it is, understand in a bit more detail what we have to do, and then talk through your projects and almost be the devil's advocate from a HMRC perspective in asking the questions that HMRC would ask you if they were to look at the claim in more detail. And if I felt we didn't have a successful claim, I would be telling you I don't think we've got a successful claim, and vice versa. If I think it's going to be a successful claim, I would be saying we've got a successful claim here. It's all about the activities that you've undertaken, and we wouldn't want to put anybody in a position where you're having restless thoughts over the R&D claim. We submit it with full confidence, both from yourself and ourselves, that this claim is going to be successful. And touch wood, we've not had one knocked back to date. So I think that the benefit there is we've got a great understanding with HMRC, and they know what we're submitting. We're putting through rigorous checks to make sure it qualifies for the relief. Just on the poll, the results have turned massively now. So we've got 75% that are saying yes, they think they qualify, 10% that are saying no, and 15% that are saying don't know. That's great, exactly what we wanted, and I'm hopefully you'll be more than happy to contact us, or I'll contact yourselves, and to try and move forward with a potential R&D claim. Just another question here: is staff costs for salespeople included? It's a cop-out answer here, unfortunately, but it really does depend on the activities that have been undertaken. Certain times the salespeople are involved in the R&D, sometimes they're not. So it would come from more of a regular chat as to determine if they have been involved in the R&D and to what level they have been involved. You can never really claim for one person to be involved for 100% of the time, but they might have an element of R&D time that they have been working on the projects. Another question here: how far back can we claim? So theoretically, we can go back 2 accounting periods. So earlier in the presentation, I gave an example, and I'll just give another one now. Say we have a 31st of December year end. So we've passed the 31st of December 2019 year end a few months ago. We can claim for that year, and we can also claim for the 31st of December 2018 year end, because the company has 1 year to submit their corporation tax return and another year to amend their corporation tax return. So in theory, for that year end, you've got till the 31st of December 2020 to submit the 31st of December 2018 claim. And we would happily help you with determining if you have any R&D in those earlier periods or not. Just another question come through here. I am a pre-revenue medical device company. When is the right time to claim? We spent our SEIS money of 150 grand. Would IP lawyers be included? And you can only claim once your year end has passed. So if your first year of activities has passed, you then need to have your accounts ready, and then we can submit as soon after that. Especially if you're a first year company, unlikely to potentially have some income there to offset against those costs. So the cash credit comes into play. The sooner we submit it, the sooner the money comes back in. IP lawyers are specifically not allowed for R&D purposes. They're not deemed to be overcoming the scientific or technological uncertainty of the claim. So that cost wouldn't be included, but there'll be a whole host of other costs that you've potentially incurred that may well be included. Just another question here, prevalent with COVID-19, this one, which is a great question. Can a person who's been furloughed undertake R&D activities? No, if you've been furloughed, you cannot undertake any activities during the time you have been furloughed. But that person may have undertaken activities before being furloughed and may then come back and continue undertaking R&D activities. So whilst they're furloughed, when we do a future year claim where furlough becomes relevant, we wouldn't be claiming for their time that they've been furloughed because they haven't been working on any activities. But it may well be that if you're thinking, well, I need this R&D activities to continue going, depending on cash flow and various other factors, that they may want to come off furlough to then assist further down the line with the R&D claim. But you need to make a commercial decision there as to if that would be relevant or not. Another question, and another great question. What about directors' time where the director is remunerated by a dividend? Unfortunately, you can only claim on the pay-as-you-earn salary. So if you're a director shareholder and you are receiving dividends from the company, you can't claim for the dividend element that you received. You can only claim for the base 8,600 quid salary that you are getting. But if the company is also making a contribution to your pension scheme on, say, £40,000 each year, that cost also gets included into determining your total remuneration from the company. So in that scenario, you'd have a £48,000 cost base for that director. So it's just chats will come through that when we do an R&D claim. But it could well be that if you took a pension contribution, that will receive potentially R&D benefit as well, which helps massively. The final question that we've got today is, there are many specialist R&D companies around. A client may ask why they should choose us to do it rather than one of these companies. Great question. I personally believe that ourselves and the team are here to act in your best interests and only your best interests. We're competitive on fees as a sales quote, but I think we care more that you aren't going to be built in a position where you are going to be worrying about this claim and that you are then thinking frantically, well, is it not going to happen? Am I going to get looked at by HMRC? We'll work in a way that ensures that everything that we submit to HMRC is bona fide, is correct, and is processed as quickly as possible. And if we feel there isn't going to be a bona fide claim to be made, we'll be upfront with you and we will say we don't think there's going to be a claim being made here. One more question, sorry, just come through. When a product has been previously designed but is then being manufactured, is design a time supervising implementation and prototyping allowable? Again, that can depend. There can be different phases of R&D. So if it's been designed and you think, all right, I've got a working prototype, and you put it into production and actually a flaw occurs or something happens and it's not working to the way you should do, and you've got to go back and research and develop the product further, you then restarting the R&D. So it really can depend on the project, and it's a little bit of a cop-out answer there, but it really does depend on a client by client and a project by project basis as to what periods of work qualify for the relief. I think I can end the webinar there. Thank you very much for your time and for joining the webinar today. I hope you found it useful. My contact details are on screen. If you would like to contact me directly, please feel free. I will try and contact yourselves as well if you'd like me to directly, especially certain people that have put quite a lot of questions in here. I'll look to contact you and see if we can assist you and talk about the claims in a lot more detail. So thank you very much for your time, and I hope you have a great rest of the day.